Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So I guess a strong day across the board. Actually a little bit more broad-based than the last few rallies, and everyone's just trying to figure out, was this an oversold bounce? Was it short covering? Can it build? Which is probably the same question we've thought to ourselves many times in 2015, as this range has been long in the tooth, and at some point, hopefully we do break out from it. You know, there's been spots to trade and things to navigate and stocks to pick, and there have been some strong ones out there, but overall, you look at the chart of the SPX and you will see that this monotonous range has been intact for a long time, wearing lots of people out, including traders who just try and, trade the range or not, or trade for more follow-through. Anyway, you look where we were on Friday, and did you truly have many clues to go, all in long? Not really. I actually tried being long a little bit on Friday for most of the morning, thinking that 200,000 jobs would be good. The market wanted good news, et cetera, et cetera. And then I left midday. When I came back, I saw this mini reversal, and I was like, you know what? What do we have here positive? We have a low, a higher low, another higher low. Still below this little apex that we put in, earlier that week. But I'm like, you know what? Who knows what's going to happen in Shanghai, in China, because they've been really weak. We're below all the moving averages, and we're not really that oversold. The oscillator was like minus 25, not minus 40, and not minus 60, so it was flat, like everyone else. So I came in, and here you go. Now you have a nice wide range bar, pretty potent in nature. We have another descending channel here. Maybe now that they stopped everybody out and got people shorted, now if you came in short, you're like, oh, what do I do? If you're rolling it up, you might see higher prices, and we'll see what we get tomorrow. Typically, you get a strong close. We can deal with it down open. We'll see how much of this we hold. If you look at the spiders, I guess we'll know what type of momentum we have here. The last time we had a big gap up from the low end of the range, it didn't get filled and we continued to the higher end. So what do we have here today? We have another gap up, okay, from a small red dog reversal. Some people were tweeting at me all day Friday, why aren't you long? You had a red dog reversal. We traded below 207.65 and closed at 207.95. That's 30 cents, and you should be in there. Unfortunately, I didn't. So anyway, here is your little range now, or two spots of your range where we took back all the moving averages. So if you wanted to put on positions today, you could try it and then figure out if we get any kind of follow through, or maybe we digest a little bit above this gap and then see some more stocks set up and then go after it. So I did come in with only Twitter calls that I started to accumulate about a week ago when it broke below 29, so that was good. And then I worked my way back into some positions. Last Thursday I talked about the relative strength in the XLE and the XOP as maybe some money's rotating there. So right around the first 30 minutes, the VTF saw me put this on long. I put it on Thursday, traded out of it on Friday, it wasn't special, and then today you got another day. Doesn't mean it's a new trend, doesn't mean it's going to be a blockbuster move, doesn't mean any of those things except for if you sold it when it broke the 200-day and stayed below the 200-day, or sold it when it broke the intermediate trend here or on the retest, you have the luxury to do whatever you want down here. And for me, I bought it in the first, I think, 30 minutes or so, and I stayed with it. It closed strong. So we'll see, perhaps if you get a little bit more of a reflex move back up. This thing has been absolutely annihilated. The time to sell it was 75 and then 70, and now you're talking below 30. So maybe hey, actually maybe it wants to come back and retest this zone. So it could be just a good counter trend trade, and then we'll see if there's more. So I'm in that. I'm in the XLE. It too had a pretty nice size engulfing day. Here was your red dog reversal on what's it called on Thursday. Friday made it look scary but never took it out, and then today poked its head above the resistance. So perhaps there's a little bit more room. It would have been nicer to see some bigger volume in stocks like XOM, that also had its first engulfing day. Look at the move it's had from below the 200-day. It's still below all trends, but maybe, again, some money's coming in. You look at the volume today, I would have liked to have seen a bit more volume than we saw today to get me involved in besides the ETFs, but some people chose it, and you could see it move back to 80 bucks. What's so terrible? Anyway, that's XOM. CVX looks the same, I'm sure. First down, first engulfing day in a while. Here's your bottom day, Thursday, inside day. Boom. Maybe there's an active trade here, back up towards 89 or so. again, below moving averages. You shouldn't be in it through this mess, but for a trade, maybe you get a day and a half, or maybe you get something like that. Back to the 21-day, which would be there. So the oil trade or the oil stocks were the ones that bounced today. I actually bought something, towards the end of the day. I'm not sure exactly why, but I figured I haven't played this thing in like multiple years. It looks, I guess, like gold. It's been absolutely annihilated. This is when it broke the 200-day in its trend back at 35. Here's when it broke another big support and probably got a lot of people stopped out and hurt. And today, what'd you have? You had this one actually had a little volume on the low, engulfed this spot. So perhaps it's good for a trade, which in the August is what you need, good for trades. So that's what I went with in the the revision to the mean, whatever you want to call it, the bean up sectors that might have had some money rotate there. This morning, I went after Apple quick. I talked about it on Benzinga Radio that maybe, above 116.50, 117, we could see a retest of the 120 to 120 area. And there was a small wedge there, and that's what Apple did. So, nice strong day today. Here is what I was showing, this wedge. Okay, you could have played this two ways. One, you could have been in it from the red dog reversal right here when it traded below 113.25 and hit 112.10 and then sat in it. And said, okay, I'm sitting in this thing. I got a great price, risk reward from up here to down there, boom, and you had a nice day. If you just played it that day and you didn't want to have stuff over the weekend, like unfortunately like me, you could have got in today. So I wound up paying up a little bit when it cleared this spot, but still a nice move. You could have been very quick, and you had to be quick. You had to have a plan, and you look at the 5-minute chart. Here was your gap up, sideways, and that could have been your entry right there also if you didn't grab it quick. Right around 117 and change-ish, and then you had to move all the way up towards 120. So now we'll see, does it want to give you another day or not? That should be helpful to see what the market's going to do. You have a retest up here of that 122. This moving averages were engulfed here, and then you have, it's right around there. This spot's going to be kind of tough, 120, 121, but day one sometimes gives you a little bit more, so we shall see. Ultimately, not acting special, but if you targeted the short here when it broke 122, this bear flag downside and covered into here, okay, and then give it some room, or you got out of your longs in here and said, I'm going to try it with the red dog reversal or try it today like Red Dog said, maybe you take profits into 121-ish, and if you're looking to re-short, if you covered into that down acceleration move, boom, that's where you look to cover. Remember we talked about this gap fill over here. I think I had the chart listed on Twitter. Well, it filled the gap, and now you're almost filled this void. So we'll see what's next. Not much action in high beta elsewhere. There's not much action in Google after messing with a lot of traders like me last week or so. It's still just in this range. I'm not sure if it's going to hold this gap or how long it's going to stay in it, but it doesn't really have much of my interest. Ever since breaking this, some momentum left, and now it could stay in this type of range and mess with everyone for a long time, just like it did in here. Amazon's the same. It's going to have to rebuild. It's going to have to get some traders' trust back because, especially from the long side, you had that false breakout on Thursday, and just now it's in the range, and I don't think anyone really is that interested in it right now. So we'll see what happens there. Netflix is also consolidating. It was the strongest stock on the board. It's still the strongest. It's still above the 8-day moving average, above the 21-day moving average, but last few days it's hovering, just letting other things play catch up. So if a leader wants to lead, perhaps this continues to hold this 119, 120 while the 8-day catches up. Even the best stocks do have to consolidate when they get extended from it. Volume's dying here just because they got to let some of the other bean down ones get back their groove somewhat. So here is Netflix. We'll see if they can hang out there for the next session or so. GPRO was a good trade for us today. Chart looks good. It's come off the lows. It had good earnings. It's kind of rebuilding itself, and sometimes it works, sometimes it doesn't. I came in flatted. I bought some today. Would have been nicer with a bit of a stronger close, but sometimes it takes a few days to really go. It's above the 8-day, above the 21-day, so it's in our game plan. You had a nice gap up here that held. Lots of shorts are still trapped. MBLY, I did buy some calls, some September 18 calls. So it gives me about a month for it to potentially, hover and hold above this area for a leadership type move above this 61, 62 zone. It came out with numbers. They tried to smash it. It held the 50-day. Now it's hanging in there. If you don't want to deal with the minutia, maybe go out in a few months and buy the calls. I bought the 60s, and we'll see what happens. It's got a month. If it wants to go and this market wants to be strong, this is held in very well. And we talked about it when it broke its downtrend. We talked about it when I had the red dog reversal right there. I listed it on Twitter when it broke out right here. So lots of different ways to skin a cat. And here we are going sideways above the prior high, above the 8 and 21 day. Perhaps it could go again. The banks kind of hanging around, and we'll see what happens there. Overall, nice rally today, decent volume for August. Market's back in the middle of the range. Now can we start to go towards the upper end? I've been reading a lot of different institutional notes, and they were saying they want to see liftoff. They want to see September. That's why I was a little bit more bullish than everyone else on Friday, saying that the market doesn't want bad news to be good news. It wants good news to be good news, but methodically. Europe continues to be a bit of a leader. The HEDJ does look as if it held in very well and could have this leadership type role again. Here's when it broke the downtrend right there, and then you also had this double bottom at the gap, and now it's flagging right in front of 66. So holds above the 64. This thing can continue, maybe even go back to highs. The FXI probably had a big move today because of the Shanghai. You had this lower type wedge, so we weren't sure which way it would break, which is one of the reasons why I was cautious over the weekend. Well, now it gapped up, after holding higher above this prior pivot, and now we'll see how much does it want to retrace. But as of right now, a little bit out of the danger zone, but anything could happen there. And I'm glad at least there was movement. There was some things to do during the day. It would have been nicer to have a little bit more clues on Friday to have more exposure over the weekend, but that's the way the market's been. The fastest moves have been the false moves, or the ones that are unexpected. And most prudent traders took down risk late last week. I would say most prudent traders that got short probably covered Friday after 7 down days in the Dow or et cetera. And now we have to figure out, does today's gap hold in the S&P? Do we digest and then go back to the upper end of the range? And if so, what could we trade to the long side? How we can participate? Can we be in a portfolio approach? So today, you go to the VTF or you look at my disclosures, you'll see I think 7, 8 things, and nothing too big, but all things for a reason, which I pretty much went over in the morning call my strategy in the morning call for today, and then before in the recap. So I'll be on CNBC Asia tonight. If any of you have world markets, I'll be hosting from 7 till 7:30, and tomorrow morning Amelia will be here, and you get to hear what she has to say. Have a great night. See you tomorrow. Bye-bye.